Good morning and welcome back to the Opportunistic Trader for Thursday, December 13th. Happy that it's Thursday. The way I'm trading, there's only one more day left in the week that we could possibly not trade well, but hopefully today we'll turn it around. We're out about $6 on our short. We're hoping that things turn around here. We expect it. Things don't look that good all around. Going Asia was up a bit, about 1% across the board. Going to Europe, kind of flat to lower, not showing a lot there. I guess you had Vince was very excited this morning for Draghi. So I think when does he did he have his press conference? But probably. I don't
Press
know.
conference
Well,
right
I
now.
was
Yeah, I'm saying they don't even have it on
well that
TV.
the,
So
the point of the excitement was it would be antithetical to my type of trading, which is trending trading. But I think today is a good regression to the mean type of day because Draghi will make the market do one thing, and then what's the phrase you used yesterday? Counter trade. I think market will be range bound today, even if there are moves because of the Fed next week. So Draghi could be some good trading for anyone who trades in the style that you do, which is fade the news if the news isn't going to really. I don't think the markets will extend moves on news today.
yeah,
That's my
So
point.
we have ECB is starting to speak right now. They are, as it planned, kind of announced further ending of QE ways of tightening, but also jobless claims just came out 206,000. They're expecting 226. Once again, very solid jobless claim numbers, which I have one other comment in a little bit about that.
didn't affect the bonds because they're green. Market didn't move a tick on S&P. So it is market moving.
Let's talk about that trade,
Which one?
the one you put on last night or yesterday.
Yeah, we could talk about it. Basically, the market closed extremely weak, closed on the low of the afternoon and of the late session, and thought there would be significant follow through. There was follow through over after the close, the post close between 4 and 4:15. It's traded down about $4. Then on the reopening at 6, it opened higher and then traded significantly higher overnight. Has settled back in to be up $6, which probably $8 with the fair value. Again, I think the market looks terrible, but it's just
Well, I mean, we've had
choppy.
2 days in a row where the market has opened strong and closed weaker. Opened strong on good news and couldn't sustain on good news. So maybe selling the close yesterday would have been nice to have a follow through. But I think selling midday today might be an even better trade for you.
Yeah, potential.
For me, it would just put a knife in my heart.
I gotta tell you, like I'm looking at my screen and the way it's set up is I have all the cash currencies. It's amazing to watch. It's like a computer. There's not a human being that could do what it's doing. It's like click, 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 click. It's like it's moving so fast in minimum tick increments and not going anywhere. It's like the British pound is up 46. It's up 47. It's up 46, 47, 46. It just keeps going back and forth. I've never seen anything like
The
it.
market's been short pounds now. We traded down to 124.70, and so now back up at 126.75. Not good for the trend followers. One thing I wanted to point out yesterday, David Rosenberg, who's a Gluskin-Sheff economist, put out a tweet saying, "Had I told you that we'd be nearly 10 years into an expansion with stock market up nearly 4 times and an unemployment rate of 3.7, inflation of 2.2, 5% fiscal deficit, and a year of nearly 3% GDP growth, where do you think Fed funds rates would be?"
5.25.
Right,
Right?
7%.
And that's that's
way to
basically
7.
what he's arguing is that like everybody's freaking out about 2.25 here. And I made actually there was a comment made back and basically saying, but we're equity market dependent, and what have you done for me the last 5 minute dependent? And if S&P drops 5%, goes up 5%, hikes on.
I honestly don't think it's that. I think you're coming from zero, Mike. So when you come from zero, you can't get to 5.25. You got to get to 2.25 first. That's the problem. The problem is they took rates to a place that they have never been in the history of
Well, then
anybody's
that would be
lifetime.
a question for Rosie. Given the normal trading range of rates, let's say 3% to 9%, and then we went down to 0%. We are in a new normal. That might be the debate to have with Rose.
Right. Well, listen, I think it's a shock to the economy. If your body is dead on a thing and they put those paddles on you, you're gonna freaking explode off the table. The bottom line is, you're coming from zero. So to go from 0 to 3% is massive. It's a massive move, and he can't look at it that way. It's what's sustainable. The market, went from 0 to 1.5, and the market, gets some slack, and then it goes to 2.5, 2 3/4 here, and we'll see what the market can do. But for him to say, all of those things are true, but the fact is, where we came from, the Fed should have been raising rates 2 to 3 or 4 years ago. That was the problem, that you had Janet Yellen in there and she wouldn't do anything, and she didn't make a move. I think she had maybe one move in her entire time there. One. Like, she literally was just sitting there every month holding everything at 0. So I get what he's saying, and he's right. Rates should be, Fed funds should be 5.25, a half at least. But the bottom line is they got to get to 3 before they can get to 5, and they got to see if they could hold. And the thing is, again, we're in the 10th year of up, and all the market is dependent on, or the economy, is the stock market. So once they get that away, then growth is going to slow here. And I don't think, maybe he holds GDP because he can rig that number, but the underlying numbers are not bullish here, in my mind. That's just my thought.
Yeah, well, that also just feeds along with the 206,000 jobless claims. We haven't had that in years. I mean, decades. And but I agree with what you're also saying. The shock. You also take a look at, let's say, a 30-year mortgage. 25 years ago, that was 8, 9, 10%. And so, if you can get a 30-year mortgage now, 4 or 5%, that's significantly less. That said, a year ago, you could have gotten it under 4%. So people are like, whoa, huge move there.
What do you mean? That's why the housing market's blown up. Housing market's blown up because they were getting teaser rates, especially on the short end. Everybody's tied to the short end, and the short end was 0. So if you take a loan, you're getting LIBOR plus 1.5. LIBOR was at 0. Now, now these rates are at 2, 2.5. Now you're paying 3.5, 4. That's a lot different than 0. You're going to buy a house. You could maybe at some point get a 30-year jumbo under 4%. Now it's 6%. So that takes people out of the market. But, it's all perception. Rates are low, but they could stay low forever. There's, the market is just teetering. And we're really at a crossroad here, because it's the 13th, and we've been saying this is 20 good trading days. There's, now we're down to maybe 12 good trading days or less, and probably less. What are they going to do? And the thing is, they're going to have to own negative returns for the first time in 10 years. So we'll see what that means. I wanted to point out my favorite stock for the next 10 years, General Electric, is up 12% today on an upgrade from the guy that downgraded it at JP Morgan or Morgan Stanley. He upgraded it to a neutral. So the stock is up 12% off that. See if it holds, but that stock is a stock you can buy right here and not look at for 5 years, and you will make a lot of money. I've seen it in Alcoa. I've seen it in a lot of names. This is what happens. They take it out of the Dow, they break it down, and they get all the weeks out, and then they turn the company. And this guy Culp has the ability to do that. He's done it before. So anyway, that's my long-term hold position. Wasn't feeling good. My price is over $8 on it, but again, I'm not looking at it trade. I'm looking at it to give to my kids in 5 years. let them deal with it. And other than that, Apple looks a little strong out of the gate relative to the way it's been acting. I think there are big shorts in that, and Facebook's up a little, but I do think the market, especially today, if it goes negative, it's not coming back, and we could take those lows. And you got the Fed next week, and the Fed is going to raise rates, and everyone's like, "Oh, it's one and done, and they're done." And you know what? They probably are done, or they may be done. They're data dependent or market S&P dependent. But who knows what they're going to say? And again, like Mike pointed out, the economy is extremely strong. They're just crying because the stock market's not going up, but the economy is relatively strong overall. So it's going to be interesting to see what the Fed comes out with.
Yes, that's
you got a
next
friend
week.
there, Vince?
I think that the comment with the Fed, we're going to be getting them next week. The expectation is as of right now a hike, and them basically moving to data neutral and or data dependent and really future rate path neutral. So anything that might have some clues in the statement that says otherwise, I believe we will have a press conference, so it'll be interesting to hear what Jay Powell says. That said, just like the past, I think that they try to kind of get out of these press conferences as unscathed as possible, leaving things as open as possible. And then, what's your take on equities here? So you went short on the close yesterday. What are you seeing from overnight activity?
Overnight activity sucks. Basically, market traded up 15 handles off of a strong Asia and pre-Europe opening. The level got up to about 70. That would have been a great short up there, but we were already short. Couldn't do that. And, I just think the market's up every morning and fails every afternoon. And one of these times, we're just going to have a full-out failure. And, Tracy was on the other day, and she's thinking much, much lower than I'm thinking. But I'm thinking, we're going to go back down, take out 2,600. And then see what it looks like from that level. See what's below that. But again, we're 50 points away from that, and 50 points in this market isn't 50 points in general on the market. So overall, it could happen. It could happen today even. We could go down 40 handles. We've been reversing on and off. Back and forth every single day. So yesterday off the high, we sold off 40 handles or 35 handles. So I'm expecting a big range today. I'm thinking the market goes lower. We're going to hang in the trade and see, and hopefully we get a good one, because it's been difficult to start the month here. And
Vince, what are your thoughts on gold here?
It's shiny and yellow and does nothing. No, I'm sorry. Gold. Okay, gold is, to make the joke, gold is Mike Pence. It sits in the middle of chaos and just watches what's going on during meetings. No, I'm bullish gold above 1236, but I extensively went into in the gold fix why I'm a little bit unsettled at its behavior recently, and we may have a sell signal on a 4-hourly basis coming in. But right now, if you're looking for two key numbers, I think that 1251 area where stops used to be, those stops are gone. And I think people that were patiently waiting to sell it have run out of patience and they're starting to sell it. So I wouldn't be long on a swing traders basis until we get above 1251. I'd fade the market as it rallies 1251, and I'd be a buyer between 1240 and 1242, and a flat between 1236 and 1242. I hope that helps.
Yeah, I think it does. The trade, I think, that we're not really focused on, which I really believe we should, is the oil trade. That thing broken down. It's tried to rally. It kind of looks in a way like the S&P. It looks like it wants to break down, and it keeps rallying, getting weeks out, getting the week shorts out, and then goes the other way. So I think that at this time, if we get a little weaker in U.S. equities, that thing could take out. That thing could definitely take out the move, which Mike said yesterday settled in the low 40s, 50-40 or so. So we're in that area. We traded down to 49.80, but I guess we rallied off of that, but these are levels that look bad. The market doesn't, the S&P doesn't look good here. It's coming in a little bit as we speak. DAX is down. DAX actually rallied a couple of 100 points off the low. And I think that trade is setting up for next year is being long Europe and everything ex-US and leaving US, out of it. It's a hard trade because it's painful because it doesn't ever really work. But, there could be a lot of stuff coming in, in politics and external stuff that could make that really happen. And I like China. I like China for next year. I think that has a possibility of having a really strong rally once they give in to us, I guess, which I don't know if they are. We've talked about that as well. So those are my thoughts.
On that, we had a great conversation yesterday with Mark Yusko of Morgan Creek, which we're going to replay later today. And he had similar views. He likes China and he does not like U.S. So he's looking to kind of fade this recent move of U.S. strength and selling the rest of the world. He likes to sell U.S. and buy. He had a few country specific, one being China. And so it was a really interesting conversation today with, you're talking about energy markets. We're actually energy heavy. We're speaking with Andy LeBeau at 10 o'clock about crude oil. And then at 11 o'clock, we're going to have Bryn Kelly and Mike Korn talking all things energy. So, we'll get a lot of information on the energy side. If anybody has any questions, put them in the Q&A area. But then we're also going to be replaying that conversation yesterday. So a lot of interesting information. And yeah, crude did not settle below 50, but we're right now trading down 57 cents at 50, 58. So we're definitely right near the lows of the year here. Interesting day ahead for crude because yesterday we sold off heavy right into the close. We were trading as high as 52.50 yesterday, then came in really hard into the close. So we'll keep a close eye on those markets.
Yeah, there's a lot of interesting stuff. Again, I'm negative equities. I'm thinking we could trade down 30, 50 handles from here. I got to see the volatility. What's interesting, and I said before we came on, we are in seasonally, I would not even say the most bullish time because it's definitely a bullish time because they always try to rally for Santa Claus or whatever, and they always say he's not coming and he always shows up. So that.
Oh, he's coming.
Oh, yeah, he is.
It's going to be call, you bastards.
So he's going to make you wait late. But here's my thought, and this is something that we could look at as a specific trade and figure out how to really make money off it. But volatility is 21 and change. Okay. It's up here for, I think, a couple of reasons. One is because the ranges are so wide, and two is because we have a Fed meeting that could have major implications to the market. So that being said, if you don't believe that we're going to go crazy to the downside, I think that volatility potentially could be a great sale. So you sell volatility and then sell the market. Now, sounds like you're doing a hedge trade, but what you're going to pick up is the fact that once we stop moving, and I've seen this in vol many, many times, they crush this stuff. So the bottom line is they're crushing, they'll be crushing volatility as the market moves up a little, and you'll be able to take your short volatility off for a much bigger profit than you would have a loss in the futures because there's a lot riding on this. And if it doesn't come to the forefront, then basically vol will get crushed. But that's something we could look at. We have time on that, but that's something interesting to look at. Overall, financials bounced off the bottom. They still don't look great. They're down about 20% for the year across the board. Some banks doing a little better, like Bank of America's a little better than that, and JP Morgan's only down small, I think, under double digits. But overall, those markets look heavy. The market looks a bit heavy, and it's interesting. We've had the same pattern. every day, which is shocking. The market opens up and then sells off. Yesterday, they broke that pattern all day long and then fooled everybody and then sold off late. Today we think they're going to sell off, earlier, and we'll keep an eye on all of that. But overall, looks a little bit quiet.
I'm just reading some comments from Tracy. She is also noting that tomorrow's expiration for crude, and she is thinking about a settle above 50. But that's definitely something also to take into account, which I'm sure Bryn will talk about a little later as well. But
well, I don't know what you mean. She's thinking about a settle above 50, or she wants to. Does she think it's
she's
not
saying looking at options? I think we settle above 50 tomorrow.
Oh, $50.
$50, yeah.
Okay. Yeah. I don't know whether 50. I don't have the options up. I could put. I don't know whether.
So we have. Coming up today, once again for schedule, Larry will be back closer to about 10:30 after Andy LeBeau. But we'll keep a close eye on things. He remains short right now, as he was talking about. He thinks things are going to trade heavy. VIX right now trading actually down small, down about at 21.15, down about 1%. Fixed income's been really quiet recently, ever since we had that large move last week. 10-year note and bond are 10 years up 2 ticks, bond is up 3. So close on that. Any last thoughts? We actually have to end a little early today. Any closing thoughts for levels or anything you're looking at, sectors, individual names?
No real levels. I'm going to try to take 15 minimum out, let it run 15 against. Got to widen the range. No, I mean, I think oil doesn't look good. And I think maybe we do go below 50 because it is an option expiration and they usually, go through strikes. But again, I think that trade may be a little crowded. And other than that, I don't, bonds are deceiving. They go up every day. I think that trade has been blown out, and it's blown out before the Fed. So maybe reestablish a bond short into the Fed. But overall, stocks look up very slightly, and the market will trade hopefully with a big range. We don't have one today. Usually we have at least 40 in. We're only 23 handle range today, so we probably will expand on that range. I would venture to say, and we'll be back to everybody later in the day. We got a lot of good content coming, and hopefully everybody stay tuned. And good luck today. Any thoughts, Vince?
No, I think you capped it off properly. We're done.
All right. Everybody, good luck and have a great day.